Since 2020, there have been a lot of real estate investment trusts that have really struggled, but one that has really stood out in my opinion, and one of my favorite REITs actually, is VICI Properties. And in fact, if we look at the past 3 years, the total return, it's pretty much returned exactly the same as the S&P 500. Meanwhile, if we look at VNQ, which is Vanguard's real estate index fund, it's only returned around 3%. So we can see a huge difference in VNQ versus VICI Properties over the past 3 years. Now, along with this, 2024 for a while was a pretty rough year for REITs. We can see year to date, VICI is now up around 5.3%, but in April they got as low as close to $27 and hit that low again in July. But now we can see over the past few months, they've had a pretty big jump up in their share price. Now, why is this? And really, there are a few different things that have happened, but one of them is quite a bit more important than others. And it all has to do with the risk-free rate. Now, what is risk-free rate? Well, basically, the risk-free rate is the rate of return that an investor can expect to receive on an investment that carries zero risk. For example, we have a lot of high-yield savings accounts right now yielding around 5%. You could consider that a risk-free rate. Now, that risk-free rate is quite a bit higher than it has been over the past decade, so a lot of investors who are looking for immediate yield have moved out of the stock market and put it into other places like those high-yield savings accounts. And this is one of the things that really hurt REITs over the past couple of years. But it looks like all of that is about to change. And that's because recently, Jerome Powell has indicated we could expect Fed to cut rates in September. Now, what exactly are the odds of this? Well, we can see that the target rate gets cut by about 25 basis points, and then a 47% chance that it gets cut by around 50 basis points. What this will do over the long term is start to decrease the risk-free rate. Now, this is great news for REITs like VICI Properties because they offer a pretty juicy yield, sitting at about 5.15% as of right now. So people will move away from those high-yield savings account and start going back into VICI Properties. And in fact, that's what's been happening really over the past month. Look at this. In the past month, VICI Properties is now up around 7.7%. This is because they know that that interest rate cut is imminent. Now, along with this news, we can also see VICI Property also recently announced around a 4% increase to their dividend payouts. In fact, it was around 4.2% increase. So that's a pretty good combination of starting yield and dividend growth. And then we can also see in their most recent earnings report, they beat on top and bottom lines and also raised their full year AFFO guidance. Now, keep in mind, this stands for Adjusted Funds From Operations, and this is one of the most important metrics to look at for REITs. It's kind of similar to seeing if a stock is growing its earnings or free cash flow per share. So with all this recent news, things seem to be going pretty good for VICI Properties right now. Again, up around 7% or 8% in the past month alone, and if we look at the past 6 months, now up around 15%. But there is a lot more to take into consideration when looking at VICI Properties, and a lot of the reasons I'm going to state in this video are what make it my favorite real estate investment trust, and it's one that I hold in my personal portfolio. So let's go ahead and start digging in. Well, first off, I want to look at this thing from a dividend perspective. If we jump over to my dividend breakdown sheet, which by the way, you can download this sheet and also get access to the Ticker Data add-on on Google Sheets that allows you to automatically import stock financials straight into your spreadsheet by going over to tickerdata.com. There is currently a 7-day free trial. But here on the spreadsheet, if I come up here and plug in VICI Properties and hit enter, we'll be able to take note of a couple things. Now keep in mind, we're looking at a real estate investment trust, so in this scenario, we really don't pay attention quite as much to things like the earnings payout ratio or free cash flow payout ratio. But what we can see, again, starting dividend yield currently sitting at about 5.13%, so that's pretty decent starting dividend yield. And then we can see the dividend growth. In 2018, they're paying out about $1 per share, and in 2023, it was all the way up to $1.61. And we can see their dividend payout now is sitting at $1.73. So they have a 5-year dividend CAGR of around 8.14%. So we're talking about a very nice combination of yield and dividend growth. You're usually not going to see that much dividend growth for a REIT with that high of a starting dividend yield. So let's go ahead and take a deeper dive into this REIT. Now, one of the things we have to always understand is how safe are those dividend payments? Are they sustainable? A lot of REITs had to cut their dividend payments during 2020. But if we jump over and look at the dividend history for VICI Properties, like we just saw, that was not the case for them. They were able to maintain their dividend payouts throughout 2020. So that's a pretty big deal, and that's something I love to see. And if we look at the dividend safety, keep in mind, we don't want to look at the earnings payout ratio or the free cash flow payout ratio when looking at a REIT. We want to look at the AFFO payout ratio, the Adjusted Funds From Operation payout ratio. We have to keep in mind, REITs are required by law to pay out 90% of their earnings in the form of dividends, so the earnings payout ratio just doesn't make sense to look at. But this is what we want to see right here, 74.76% with the AFFO payout ratio. That's a very healthy range, and we can see for the trailing 12 months, it's sitting at about 74.77%. So those dividend payments are sustainable. The payments are backed by their adjusted funds from operation. So they pretty much check every single box for me from a dividend perspective. They have the yield, they have the dividend growth, and then they have the dividend safety. But I also think this company has some unique competitive advantages that make it a very attractive real estate investment fund. And what we can see is if we jump over to the investor presentation, I'm going to point out a few of these competitive advantages. And the very first one is actually going to be on the 5th slide here. Now, first off, we can see 100% of their tenants operate with a triple net lease contract. Now, what does this mean? Well, under a triple net lease contract, the tenant is responsible for pretty much all the property's operating expenses, and this can include things like property taxes or building insurance or even maintenance cost. And so this is a huge advantage for Vici, not because it's only lower cost for them, but it also makes their cash flows very predictable. It doesn't fluctuate up and down quite as much. And then the other thing we have to keep in mind is Vici Properties owns some of the highest quality real estate in Las Vegas. There's no place in the world like Las Vegas. You simply can't replicate it. And we'll be touching on that a bit more here in just a little bit. But if we scroll down to the next slide, the 6th slide, there's some really good takeaways from this slide as well. Now, first off, here's what we can see. Remaining lease term is around 42 years. Now, this does include tenant renewal options, but it's pretty obvious that they would renew those options with the way that Las Vegas is exploding. So again, very predictable tenants that are going to be sticking around for a very long time. One of the things we can also see is 2020 rent collection. Like I mentioned earlier, a lot of REITs had to cut their dividend payments in 2020 because a lot of their tenants simply couldn't pay the rent. But we can see that was not the case for Vici Properties. Every single one of their tenants paid their rent in full. So it creates, again, very predictable cash flows even during turbulent times, meaning that dividend is very well backed and very sustainable. That's something I love to see as an investor in this company. If we scroll down to this next slide, this is actually one of my favorite things about Vici Properties. We can see their estimated CPI protection as a percent of Vici's rent roll over time. So what exactly are we talking about? Well, a lot of Vici's leases have CPI-linked escalation in their contracts. So what this means is basically if inflation were to go higher, it's in the contract that their rent is going to increase for their tenants. So right now, as of 2024, about 50% of their tenants have CPI-linked escalation in their contracts, but they're estimating by 2035 this will be 96%. So pretty much as an investor in Vici Properties, I don't really have to be concerned about inflation because their rent's going to increase along with inflation. That's a great sign, and I can feel a lot of comfort in that. And then if we come down here to the 8th slide, like we already know, they have a great history of dividend growth. We can see Vici Properties' compounded annual dividend growth rate is quite a bit higher than their peers, and there's some pretty good examples here. ADC, I think this is another good REIT, but even their dividend growth hasn't been quite as high as Vici Properties. We have Realty Income, another pretty solid REIT, but their dividend growth nowhere near Vici Properties. So we can see those dividend payments growing at a pretty rapid rate over time. And then finally, let's talk about Las Vegas for a moment. If we scroll all the way down to the 12th slide, Las Vegas is absolutely exploding. We can see they had over 41 million visitors in 2023, and they also set an all-time record when it comes to gross gaming revenue in 2023 at $8.9 billion. And Las Vegas is becoming much more than just a tourist destination or a visitor destination. We can see they're breaking out as a sports hub. We have the 2023 Stanley Cup champions, Las Vegas Golden Knights. We have the Raiders. They recently moved to Las Vegas. And one of the really big ones is they hosted the 2024 NFL Super Bowl. That brought a lot of people into Las Vegas, and they're also planning on holding the 2028 NCAA Final Four. So Las Vegas is a global entertainment hub that is absolutely exploding, and Vici Properties is set to benefit from this explosion. So it's easy to see why I'm such a big fan of this REIT, Vici Properties. But the question is, are they still trading at a good value at $33.72? They're already up around 7.3% in the past year, and year to date up around 5.76%. And one of the things we also have to ask ourselves is, should we consider buying them before the rate cuts? Well, let me go ahead and tell you this. The rate cuts are already priced into this stock. And again, we can see that with how the price has moved over the past few months. They were trading as low as $27.64 and are now hitting around $33.72. Now that's not to say rate cuts could still push this stock a little bit higher, but for the most part, I do think this is priced in. But to analyze if this stock is worth buying at its current prices, let's go ahead and jump over to my REIT valuation sheet. Again, provided by Ticker Data. We'll come up here and plug in VICI and hit enter. And we can see all this data will automatically load in. Now, one of the things we'll take note of is the beta is sitting pretty close to 1, so the volatility should be pretty close to that of the market. But the first valuation we're going to go ahead and look at is going to be the AFFO valuation model. And basically what we're doing is we're looking at how companies that are somewhat similar in structure and we're seeing how the market is valuing them using a price to AFFO multiple. And the average price to AFFO multiple for these comparable companies is sitting at about 16.7, while Vinci's is sitting at about 14.88. So if we applied the same average P to AFFO multiple to Vinci, we'd come to an intrinsic value of about $37.84, a little bit higher than that current trading price. Now, the next valuation we're going to look at will be our dividend discount model. And this values a company based on how much they're paying out in dividends and how much that dividend is increasing over time. So we can see that dividend history and the dividend growth right here. Moving forward, we're projecting a dividend growth rate of about 3.75% and a discount rate of 8.5%. So when we plug this into the model, we come to a dividend discount model price per share of $37.79. So when we jump over to the output tab and average those two valuations together, we come to an intrinsic value of $37.81. So if we apply a 10% margin of safety, it looks like it's just barely in that acceptable buy range, and with a 20% margin of safety, our acceptable buy price would be around $30.25. So I've been saying for quite some time now, Vinci Properties looked like a really attractive opportunity earlier this year when it was trading as low as around $27, $28, or even $29 per share. And over the past year, I've actually added quite a bit of Vinci Properties to my personal portfolio, and I'm up decently on this position. If we look at my do-it-yourself investor toolkit, I'm currently up around 22.2% on my Vinci Properties position, and I'm looking forward to the dividends that's going to be paying me for the years to come. So honestly, I believe Vinci is such a quality REIT, it deserves to trade at a slight premium, and I truly believe it's still slightly undervalued even with the recent run-up in its share price. Vinci has very predictable rent and very predictable dividend payments that they were able to sustain throughout 2020. They're protected from inflation and they have phenomenal dividend metrics. And most of their property is located in the middle of the growing Las Vegas hub. There's a lot to like about this company. So moving forward, it will be interesting to see when the Fed cuts rates. Will this boost the stock just a little bit higher? Regardless, either way, I'm happy to continue to own this stock. So there you go, there is an analysis on Vinci Properties. Go ahead and let me know what you think of this company in the comments down below. And like always, if you'd like to be able to get access to any of my spreadsheets and also get access to the Ticker Data add-on in Google Sheets that allows you to automatically import stock financials straight into your spreadsheet, then you can head over to tickerdata.com at the link in the description. So with all that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.